Hey, what's going on, guys? Bot Mentality here. Today I want to talk to you a little bit about FlowAlgo, which is a software that we use in the room. Just to break it down, first thing, I pay $150 a month for this software, and again, it is called FlowAlgo. If you join the room costs you $25 a month to join. So essentially, you're getting access to a $150 platform for free. Okay, because I make sure that all of my guys have access to this information live throughout the day. So what is FlowAlgo? What FlowAlgo does is it tracks the large sweep orders in the market and displays them to you in a nice format. So what a sweep order is if someone with a lot of money wants to make a large bet on an option, he's not going to place a limit order on a single exchange to a single broker, because that's going to show it to everyone that he's placing this order. Number one, he's never going to get filled. Number two, other large players will see that order come in and try to mess with them a little bit as far as the fills, right? People might try to manipulate the price, or who knows. And they don't want to have to deal with that. And they want to be sneaky, right? They want to be able to get size without people knowing about it, because if people see that order come up, people are going to jump ahead of him. He's never going to get a fill. So what people do is they break up that order into something called a sweep. They'll submit a large options order to multiple routes through multiple exchanges, right? At the same time, immediately at the same time, they're going to submit that order. It's going to go through a bunch of different exchanges, get the fill. And the most important thing you need to realize about these sweeps is they're aggressive orders only. So FlowAlgo only tracks orders that hit the ask, right? So market orders. So when they submit an order, they don't care what it fills at. They just want to get in because they have an extremely bullish or an extremely bearish bias, and they want to get in this options play. Why this is so important is, as you know, in options, especially when people use shorter term expirations, you want to know about it. It's valuable information, because if someone's making a $200,000, $500,000, or $1 million bet in a stock you're in, you want to make sure you're in the same direction as they are the majority of the time. And you want to know that that bet is being made in case an opportunity arises after that. And I'll be giving you a good example here in Boeing, okay? So I think, yeah, I explained what a sweep was and the significance of it. And here's how we use it. So in order for us to utilize this software, three things have to line up. The sweep order has to be in the direction that we're biased in already. The sentiment around that stock or around the market has to also correlate with the direction of the stock that we're looking at in the sweep order, right? And the technical analysis, so the technicals have to line up with our bias and the sweep. That's kind of how we look for those three things to align, and then we put the position on, okay? We don't just see one of these orders come through and then follow it right up, okay? That's how you lose money quick. Because this guy who threw 86K on the 200s, right? He might not care if he drops 50% before he gets to 200, right? He might have a different risk than you, right? He might even be doing this to try to, maybe make people think, okay, we're going to rip to the upside, right? And then he just short stock into you, right? Who knows what this could be for? So you need to see those three things line up before you go into these. You don't just chase an options play. That's just stupid, okay? Anyway, we'll talk more about that in the room, right? So I'm going to go ahead and break down what it means in the categories. Okay, from the left here. So first, you're going to see the date. The date is the exact day. Let me mute my phone. Since all of a sudden now, when I make this video, people decide to blow it up. Okay. All right. So Boeing. Over here, you see the date. When did this order come through? It came through yesterday on the 3rd. What time did it come through? 3:55, right? The ticker name here, red for a put and green for a call. Expiration date. This will show you how many days until that option expires. The strike date shows in that option, whether it's a call or put. The spot is the location on the stock where they bought it. So when they purchased this 200 strike call, the stock price was 173.08. Details, how many contracts at what options price. Type, it just shows you whether it's a block, sweep, or split. Don't worry about that too much. Just keep in mind that sweeps are the strongest order type. Blocks are kind of below that, and splits are just kind of in the middle. But sweeps are what you really want to pay attention to. Volume, how much volume is on that option strike. Open interest, how much open interest is in that option strike. Premium, how much money he spent on that option. Don't worry about these other two categories, okay? So pretty much, I'll tell you right now, the most significant things you need to know is you need to look at ticker. I look at the expiration. The further the expiration, the less significant in the short term. The shorter term the expiration, the more significant in the short term, right? So if I see an 86K order here on the 200 strike calls for 3 weeks out, I don't really care that much. But if I see a 230 grand order on the 170 strike calls, I care a lot. I want to know, what does this guy know? What is he thinking? What does he see in the charts? He bet a lot of money. And as you guys know in options, okay, when you're betting on a 0-day expiration 170 call and you put 200 grand in that, you know in options you can drop 50% on your option in a second, right? If anything happens, if anything doesn't go your way. It's not like stock where he might sit at 230K and it goes down a little bit and then he's down like $1 grand and it goes down a little bit more and he's down like $3 grand. No, he can go from 200K to 0 in 1 second on any hit piece, okay? He chose a 0 days till expiration option, extremely dangerous. But when someone bets that kind of money, don't you think they know something? Don't you think they're more certain than other guys who make smaller bets? You want to pay attention to stuff like this, okay? That's why this software is so good. So now let's show how this playing down the charts, okay? This is on the 3rd, right? Boeing is just one example of this week where the stock blew up and it had a ton of options flow kind of predicting the move, and you can see how it turned out, right? So right off the bat, at 9:54 a.m., this guy loaded up 0 days till expiration, right? Or in this case, it was 2 days till expiration. He loaded up on the 165 strike calls. He bought them when the stock price was at 157. Okay, he put 27K in. Okay, just a couple minutes later, right? So 14 minutes after this, at 10:08 a.m., somebody followed him up. He bought the 165 strike calls. Now notice the stock price when the first guy bought them was at 157. Now it's at 159, okay? And he put 30K in. Well, guess what? Okay, look at the price of the option. This guy bought them for 82 cents. Then 10 minutes later, this guy's paying 128 for them. So what happened? This guy's now up 50%. So he's up a little over 10K, okay? He's up a good bit, right? Because of where he bought these, right? So keep that in mind as the price goes up, and you can see how these options impacted the stock. And I'll pull up the chart here in a second, right? Keep moving up. These are all for the same expiration date. This guy comes in with a 6-figure order at 10:32 a.m. Okay, and he bought the 160 calls. The 170 strike calls 2 weeks out. He put 100. He bet 130 grand. We're going to 170. So let me just stop you right here. If this guy bets 130 grand, 2 weeks out that we're going to 170, are you going to turn around and buy a $500 put against this guy's order to kind of counter trade him because you know something he doesn't? Stupid. Okay, stupid. So that's why you can see where this momentum is going. Notice there's not a single put sweep in here. Look at these huge premiums: $1 million, 300K, 300K, 100K, 100K, all the way through the day. Look at the end of the day. This guy, 3:55 p.m. He bought into 86K 3 weeks out. 200 strike calls. Let me pull up the chart. Let's talk the chart real quick. So as you can see, over here is the day these calls started coming in. The guy bought them and they were over here, and then he was up 50%. And then people rolled in at 10 a.m. Then people rolled in at 11, and look where we went. The stock went from a low of 155 all the way up to 170. All these people are banking, right? All these people are banking. The guy into the close, this guy right here, pull it back up here for you. This guy right here, who had a 355, he bought the 200 strike calls and he put 86K into them. So you're telling me after seeing all this bull flow, you think it's a good idea to short the stock? You think that these millions of dollars worth of call flow these people are betting on this stock, you think you know something they don't? You want to short $1,000 worth of puts because you're a big shot? That's what you want to do? So check this out. Boeing, the next day, that guy got long right here. He bought the 170 strike in the money for 2 weeks out. The next day, this guy's up probably like 500%. He's up huge, okay? He's up huge on his like $86,000 bet, right? Because of the huge gap up. So you can see how throughout this entire day, we saw a ridiculous amount of call flow. So buying calls into the close immediately paid out on that gap up, and then we pushed up and opened strong, right? So this is options flow. You can see the significance now. You can see how these early orders foreshadowed the move. They increased in size in the middle of the day, huge bets on strikes that were a couple weeks to a couple months out of the money. You want to be, as long as the trend is intact, the technicals and the sentiment on the stock, on this day, all the airlines were rallying. So all the peers were rallying, right? And you see the options flow. You see the trend over VWAP intact overall. This is when you can consider that long idea with more confidence because you see these huge bets in your direction that are pushing the price, pushing the bullish buy as people are rushing into the stock, okay? Okay, I think I went over everything there. I think that covers how we use FlowAlgo and why it's significant and how you can use it in your trading. I'm gonna get out of here, guys. If you want to join the chat room, I have information in the description box below. You can shoot me a message if you have any questions, or drop a comment if you have a comment. I'll get back with you. And that's it, guys. So I'm out of here. Deuces.